Okay, well, everyone, welcome back. We are on day 3 of today's virtual training, or this week's virtual training, I should say, from November 29th to December 3rd. And today you have Cora and I. I know I was not here yesterday, so sorry about that. We had another webinar. And sad news, I will not be here tomorrow or Friday, so you will have Cora and Cheryl, but we're here today. I'm happy all three of us, as far as Cheryl, Cora, and I are in today's session, so thankful for that. For those that are not so familiar with myself, I'm the Training and Development Manager for the Native Learning Center. My name is Crystal Cedino, and I have my right hand with me today, Cora Anthony. She's the Training and Development Specialist. She is doing a sign-in right now as all of you are entering the room, and she's muting you. Cora, I don't know if you want to shout out hi. She just wave. I can't see her.
Hello, everybody.
Oh, there. Okay. There you go. Awesome. So we are both here today to help y'all out with any issues that you might experience in today's session. Again, just a disclaimer, this virtual training provides a summary of fundamental concepts, requirements, and/or procedures within the allotted 90 minutes. The material discussed does not illustrate all possible scenarios that could be applicable, so please keep that in mind as we, think about our questions and so on and so forth. By no means do I want to discourage any of you from, oh, I froze. I think I froze. Oh, no. Okay. By no means do I want to discourage by no means do I want to discourage any of you from asking questions. Just keep in mind that those very specific questions that you might have might require a little bit of digging. So please just keep that in mind. All right. And so for the format of today's session within, Microsoft Teams, if you're viewing today through the web browser, all of your features are going to be towards the bottom of your screen. If you hover your mouse, a pop-up of sorts should appear. And from there, you'll have camera access or, abilities, microphones, as well as the chat feature, and then to be able to see who else is inside of the room. Okay. And here's just a more descriptive, image of how the environment works. Again, just camera on and off, connect it. As far as audio goes, need to make sure that all of your audio settings within your computer or whatever technology you've decided to use for today's session is selected to sync with, the actual laptop, tablet, whatever it may be. Okay, and in order to do that, you're going to go to the 3 dots that's right there. My mouse, I don't know if you can see my mouse, but the 3 dots there, and then you can show your device settings and make certain selections. And then same thing goes for your background. You can create a blur. You can put on live captions. So tons of features available. Feel free to kind of play around with them and make use of them. And with that, the one difference that I wanted to mention in today's session was that as far as your questions go, again, I'm not here to discourage any sort of questions, no matter how specific they be. But I do want you to keep in mind, as Cheryl's going through the material, if you notice that a topic is, or there's something that you want to inquire about, please take a look at your agenda, which we uploaded to the materials page. So it should be there. It's just titled Procurement 101 Agenda. It's a PDF, and it's the exact image of this. So with that, just keep in mind where we're at on the agenda, and your question might very well be answered next. Okay, so just want that. Cheryl is going to insert moments for y'all to, have a moment to ask questions and so on and so forth. But we did want all of you to be mindful, which is why we uploaded that PDF of the agenda. Okay, so y'all have it handy. You can look at it as we go through the material. You also have those PowerPoint presentations, so take a look at those as she's going through. I know it can be a little difficult to go back and forth, but it is there for you, for that purpose, essentially, to reference. All right, I don't think. And again, the link for the materials, we'll go ahead and throw that into the chat box. Again, just in a moment, if Cora hasn't already, because I know she's like quick fingers. But with that, everything is on there, okay? So you should have access to absolutely everything, and it's not getting taken down anytime soon. So it will be there available even after we finish the session on Friday. Okay, so don't panic. But I highly suggest you take advantage of that webpage that we have built for all of you. Okay. Other than that, I'm going to go ahead and stop sharing. Please stop sharing. All right. And all right, I think, oh, I'm lagging again. I think we're good to start. Go ahead, Cheryl.
Can you see it? Yay, okay.
Yes, ma'am.
I am going to get to yesterday's questions as soon as I get through the intro, if you guys don't mind.
Yes.
Okay, welcome to day 3. Dave beat me to it. Happy first day of December. He put it in the chat box, but I had it in my presentation. So welcome. We made it. 1 month left. Welcome and good afternoon. Sending up some smoke and prayers. There's my info brought to you by the Native Learning Center, and you are being recorded. I don't think there's anybody new in the class. I'm Cheryl. I'm from Bay Mills. I've got like 32, 33 years in housing. And today we will be covering micro purchase methods, cash management and internal controls, small purchase methods, competitive sealed bid methods, solicitation of bids, wage rates for construction contracts, and competitive proposal methods. I would encourage, like she said, to grab some of this material, especially like your Indian preference stuff. I don't know what you have in place. Your federal micro purchase threshold. That's going to discuss the DeMinimis, which we're going to talk about in a second. We're also going to be hitting upon when you're doing a telephone inquiry or solicitation. So 14, 15, and 16 actually kind of speak to that, and it's a sample that you could perhaps reference when I'm going through this. It would be very, very helpful to you when you do that. The next thing I would ask you to do is kind of like close your eyes, because I'm going to go really fast because I put the other stuff on the other end of my appendix or my PowerPoint. So I hope it didn't make you get dizzy. Let's see, here we go. Okay, so Deborah Whitefoot, independent cost estimates and force account. Where there is no apparent hard and fast rule, you should probably prepare that ICE even when you're using force account, so you can gauge, do your due diligence and gauge your anticipated overall cost. For purchases over your housing entity's small purchase threshold, that level of detail is going to vary, but you should commensurate with the size and the dollar value, your complexity, the commercial nature of that requirement. They're normally broken out into major categories: your labor, your materials, other direct costs, travel, overhead, and profit. So even though you're supplying the labor, you're still going to have material in those other things, and this will give you a better idea what your expenditures are going to be. That ICE serves as their primary in-house gauge of cost and price reasonableness. So reimbursement contracts. You know, I made some phone calls to some people with 30 years plus in housing and some HUD personnel and different things, and basically the same gut feeling that I have. I couldn't give you an example because none of us ever really participated in reimbursement contracts, because they're not usually commonly done in Indian housing. That's what everybody said. You shouldn't be doing those. Well, okay. So what is considered a cost reimbursement contract? The definition of a cost reimbursement contract is a contract where allowable contractor expenses are covered to an agreed upon limit and an additional payment for a profit. When would you use it? Also, that cost reimbursement contract is also called a cost plus contract, often used for research, construction, and other undertakings that will require the purchase of materials. They're not commonly used in Indian housing. So therefore, maybe somebody in the class can come up with some stuff and throw it in the chat box for them. But I can't give you very many examples because I never used one in 28 years. And everybody I called, nobody had either. So there's an answer, but maybe not the one you wanted. Now, we had and I should have known we were going to get this one, and I was telling Crystal about it. There's actually a whole class right now being offered on the de minimis procurement exemption. You know, it starts off in Latin, so we should know that we're kind of in trouble. But under your IHBG program for procurement of goods and services valued less than $5,000, recipients can continue to operate under the existing statutory de minimis procurement exemption, which you can find at 203G. So I give you examples of this within NAHASDA. Micro purchases and de minimis exemptions are two different methods for simplified purchasing. Recipients can develop procurement policies that choose between the two options for purchases under $5,000. However, tribal preference requirements will apply to all micro purchases regardless of the value, but will not apply to a de minimis procurement. Now that's the confusing part. So when you go to the NAHASDA law, de minimis exemption for procurement and services, notwithstanding any provision of the law, a recipient shall not be required to act in accordance with any other applicable competitive procurement rule or procedure with respect to procurement using a grant provided under this act of goods and services, the value of which is less than $5,000. So when you go into the sample that's within our appendix that's provided by HUD, methods of providing Indian preference, the sample procurement policy. Within that policy, it says for purchases below the micro purchase threshold per 24 CFR 1052, which is directly below this. I put that in there also. The tribe or TDHE is not required to use Indian preference for purchases under the micro purchase threshold, 10,000 or lesser. Or the amount adopted by the tribe. And then when you go to the law under 1052, what tribal or Indian preference requirements apply? Procurements that are within the dollar limitations established for small purchases, 2 CFR 200-320, need not follow the formal bid or proposal procedures, or since these procurements are governed by the small purchase procedures, 2 CFR 200-320. However, a recipient's small purchase procurement shall, to the greatest extent feasible, provide Indian preference in the award of contracts. Bottom line, you should always try to provide Indian preference, and it depends upon the procurement policy that you've got in place and how you reference the de minimis when it comes to 5,000 or more. Okay, now close your eyes again, because I'm going to do this one more time to get back to where I was at.
Cheryl, Deborah asked, no subrecipient agreements, ? And why should we not do those? And then she says she has 2 subrecipient agreements right now.
I didn't say anything about subrecipient agreements, did I?
I don't recall. On the first line of the
On the
review.
first line of?
At the bottom of your
Of
presentation. What? That one. I don't, Cora, did you recall? I didn't recall. Deborah, can you clarify? You can go ahead and unmute yourself.
Okay, I was just wondering if what's the difference then between a cost reimbursement and a subrecipient agreement then?
A subrecipient agreement is someone else that administers your program basically for you.
Yeah, I have 2 of them. I have 2.
Right. I don't know. You're going to have to look through the procurement.
Okay.
We do talk. Matter of fact, we're going to actually, I think there's questions on subrecipients. That's a totally different thing, my girl. And I think that's, look, it's on like day 4, maybe 5.
Oh, okay. All right.
Okay.
Thank
I was
you.
gonna say, I
Sorry.
don't think I answered that in there like that. Okay. Okay, now I'm gonna go back up there. Okay. There we go. Oh, I gotta get rid of that. Now we will. Micro purchase methods. So, micro purchase thresholds are found at 2 CFR 267. And micro purchasing means a purchase of supplies or services using simple acquisition procedures, the aggregate amount of which does not exceed that micro purchase threshold. Your procedures compromise a subset of non-federal entity, which that's what they're always going to refer to you as, small purchase procedures. In order to expedite the completion of the lowest dollar small purchase transaction and minimize the associated administrative burden and cost, the micro purchase threshold is set by the acquisition regulation at 48 CFR subpart 2.1. It's $10,000 currently, but that threshold is periodically adjusted for inflation. So micro purchases, if the purchase is considered reasonable, no competitive solicitation is required. As long as you keep in mind that if it's Davis-Bacon, you have that $2,000 threshold for procurement subject to Davis-Bacon, and $10,000 for all other procurement using your federal funds, unless you have a lower threshold stated within your policy. So that's when it's, important to make sure your policies are up to date. It applies to all purchases below that established threshold when there is a reasonable cost available. Just because it's under 10,000 doesn't mean you should be spending 9,000 on a $3,000 piece of equipment though. Documented with an authorized purchase order or other formal method. Your purchases can't be broken into smaller transactions to meet that micro purchase threshold. You can't do 4 purchases of $9,000. So to the extent practicable, that your entity should distribute those micro purchases equitably among qualified suppliers. They look down at you getting all of your stuff through one vendor. They would like, to kind of spread that money out as long as you can get a good deal and good services and good products from multiple people. So there's that prohibition against that bid splitting. So your contracting officer should not break down any requirements aggregating more than that small purchase threshold or your micro purchase threshold into multiple purchases that are less than the applicable threshold. And they refer to that as bid splitting or unbundling, you'll hear it called, merely to permit the use of the small purchase procedures or avoid any requirements that apply to purchases that exceed those thresholds. Any questions? And I can't see if you do. Throw them in the chat box, and Crystal will hit me on them. And if not, our next section is card management and internal controls. If you're using credit cards for purchasing and petty cash, even your purchase orders, you should have some defined procedures that lay out who's allowed to use them, how much they're allowed to use them for. You need to have that in place and written down and documented. So petty cash funds are to be used for very small one-time purchases. If utilized, petty cash funds should be established within your procurement policy, should be sufficient to cover very small purchases over a reasonable period, for instance, a month. You should have a policy for it. So you should have a petty cash policy, which would establish that overall amount of that fund, establish the maximum amount allowed for each purchase. Either establish the appointment of one or more individuals as your petty cash administrator, or the procedures for appointing such an individual. Not too high of an amount. I just worked with a housing entity that was one of their findings. And you got to make sure that your petty cash amount's not like $1,000. You don't need $1,000 in petty cash. You should also set up where somebody besides the administrator should periodically go in there and do an audit to make sure that the records on that are correct. Even though you have cards, right now, I think we paid like $4 if we have to go into the Lower Peninsula. So we have a bridge fare. That was one of the things that we kept petty cash fund for, was bridge fare, going downstate if somebody had to run down and get materials or something unexpectedly. So petty cash things are still a thing in the majority of places. Purchasing cards, debit, credit cards, are another payment and not necessarily a method of procurement. Purchasing cards can be helpful in reducing transaction cost. Purchasing card usage, however, should follow the rules for all other small purchases. For example, your contracting officer may use a purchasing card for micro purchases without obtaining additional quotes, provided the price is considered reasonable. For amounts above the micro purchase level, that contracting officer would generally need to have obtained a reasonable number of quotes before purchasing via using that card. So you need cash management and those internal controls. So when you're using those cards, it should adapt reasonable safeguards and procedures that are used only for the intended purpose, for instance, limiting the type of purchases, the amount of purchases that are permitted with a credit card. You should make sure that they have guidelines for selecting the merchants, vendors, tracking, purchasing, and card payment and settlement procedures. Just make sure, that you have them also sign usually a credit card agreement saying that payment is due within, how many days, that it's not allowed for personal purchases, what you're going to do if they make a personal, I actually should have probably expanded this section and put a sample policy in here, because people get tagged for not having a good credit card policy also. What you're going to do, how you're going to take that card back, where it's supposed to be stored. There's lots of different things that you should make sure this within your policy. Purchase orders, the same thing, that form. Purchase orders are usually used on a standard, housing entity form. While HUD does not prescribe any specific form, your purchase orders generally, it contains information regarding your scope of work, your services to be provided, price, delivery, method of payment, inspection, and acceptance, or it should deal with all of that realm. However, additional terms and conditions may be added depending on the nature and the complexity of that work that's required. Most purchase orders under the small purchase method would be done via a purchase order center given to a contractor to initiate delivery of items for performances of your services. The issuance of a purchase order by a housing entity and its acceptance by that contractor, either through performance or signature on that purchase order, actually constitutes a contract. It's crucial, that purchase order clearly specifies the items or services being purchased and the terms and conditions of that purchase. Unless you run a really, really tight shop, I think the majority of us are very, very guilty of that, or your maintenance guys. I remember walking in and seeing a signed purchase order written out with the vendor's name, and that was it. I'm like, what are you doing signing this thing? And it's literally blank. You could have went in and bought the store, basically. Sometimes your maintenance staff, unless they've had any type of procurement or anything, they're not familiar with that is a binding contract. That's a very, very important scenario. So make sure you have a chat with your guys in the back. And who do you allow all your maintenance guys to do purchase orders, or is it just your procurement department? That's something that you maybe need to put an eye on to make sure that you're doing correctly. And if you don't have time now, write yourself a note, and during your self-monitoring, that's a good time to hit it. But purchase orders are something that usually could definitely be beefed up, the use of those within the majority of housing entities. So when you're receiving goods and services and approving payments, you should establish systems for ensuring that items required by a contract are received in accordance with contract terms. Payments should also be processed promptly to allow for prompt payment discounts where applicable, and to otherwise maintain good relations with your contractors. It goes a little bit further than that. One of the problems I remember my staff arguing, what are you guys arguing? Well, she keeps unpacking our stuff, or the maintenance guys know that came in UPS and they just took it. I don't have the slips with it. I don't have that with it. Come up with a procedure who's allowed to open things and how you're going to take out those documents you need for your accounting department, for your procurement department. That's another area that people can usually tighten up on. Any questions on any of those, guys? Okay, now we're gonna go.
So Lisa Hood inquired, our current policy does not require POs for less than $1,000. Is that okay for HUD grants?
Call your HUD officials and ask what their threshold is. You should have some proof of how are you proving if you're not using a PO, what are you using? And if she doesn't want to answer me, we can do this one later or whatever, but no, you don't have to use a purchase order for everything, but you have to make sure that you have a method in place that you can check that procurement, the paperwork, if that helps.
Not really, but that's okay. Thank you.
You know what? Your HUD officials can actually be really, really very helpful. Establish a relationship with one of them. And if they don't know an answer, they'll get you one. And it looks good that you're actually asking questions, believe it or not. We used to have that argument back and forth that it made it hard for some of the housing entities to actually call and ask for help to the person that's kind of grading them, I guess you would say. So we used to have to, as I told my staff, put your big girl pants on and get over it, but establish that relationship and find somebody within that office you can ask for help, and the other person that you can always get a good relationship with your auditor. And when you have a question, call your auditor too. But yes, you have to have some form for your procurement files of proving you purchased something, a record of purchase, I guess is what I'm saying. So we're going to go into small purchases next. This is a picture of what it's going to look like here, the bridge to get to the lower peninsula. This is what happens with our ice within a couple of months here. So your small purchase method is an optional method available when procurement is less than your simplified acquisition threshold, which is $250,000 or less, according to whatever your policy is. Oops, sorry if I didn't. Okay. It can be used to procure office supplies, vehicles, all the way up to vehicles, rehabilitation contractors, professional services, equipment, depends on that threshold. The principles of a small purchase method is just got to be competitive, should be competitive. It can be less formal. It can be done by phone, fax. You got to be bidding apples to apples when you use the small purchase method. Apply along with either bids, quotes, proposals, requests for proposals. And NAHASDA right now currently permits this method when it's under your $250,000 threshold or whatever your tribe has in place. Establish your threshold in your procurement policy and follow it. Your key elements to a small purchase method: no public advertising necessary. You need to have an adequate number of qualified bidders. That's going to vary. Some people says 2 is adequate. In my mind, 3 was always adequate. Okay, so adequate number of qualified bidders. At a minimum, use a written checklist in solicitation, so each bidder has the same information. That's why I was asking you to, pull up those examples that are in the appendix items. It'll give you a very good, and use that script. It's not fair to call one person and then they ask a question, and then 5 minutes later call another person and ask the stuff that they had questioned about when you didn't give it to your very first person. You should be giving the same amount of information to everybody to make it fair. So you can do it, like they said, phone, fax, website, email, in person. If that solicitation is conducted by phone, the questions should be uniform, consistent for all your potential bidders. You can't divide again. Can't drop them up and separate them out. You can't divide those large contracts into multiple small contracts. And any lack of competition requires HUD's written approval. You'd find those under 24 CFR 1052. So if nothing else, I hope some of you guys, if you're not used to using HUD guidances, have downloaded those top 3 and put them on your computer so you can look up things like 1052. That'd be very helpful. So solicitations. Generally, if a price quotations are sought verbally, the selection factors must be provided to those that you solicit. Requirements for services aggregating greater than $250,000, or whatever your threshold is established, must not be broken down into several purchases that are less than the limit merely to permit contract award under that method. If there's a reoccurring need for services or supplies, which is estimated to go over your $250,000 or your threshold, sealed bidding or competitive proposal procedures should be used rather than small purchase procedures. In all cases, the prices paid for small purchases must be fair and reasonable. The most effective way of accomplishing this task is to solicit competitive quotes. Competitive quotes can be solicited by telephone, letter, internet, or other informal procedures, provided that the manner of the solicitation provides for participation by an adequate number of competitive sources. Competitive quotations should be solicited from an adequate number of qualified sources in order to promote competition to the maximum extent possible. The competition requirement is based on 2 CFR 200-319. So this is when you should be going to 2 CFR and looking under 319 to find out about competition. Award. Before awarding a small purchase, the price must be determined to be fair and reasonable. A reasonable price can be determined based on catalog or market prices or comparison with other competitive purchases of the same item. The procurement file should be documented with the basis for this price acceptance. If available, copies of any commercial price list should be kept available by procurement personnel. So I used to say, go on a website and see if you can find, give me the, I don't want to say, the orange or the blue lumber yards price. And if it's anywhere, take a snapshot, a screenshot, put it in the file so you can show them, yep, this is reasonable around that. It's probably going to be lower when we're, 4 hours away, but it's in the ballpark, and you can show them that that's a reasonable at this period in time. Very, very helpful to always try to get a date in that screen capturing at that time. That's just something, by the way, dates. If you can get dates on things, make sure it's printed on your page. When your guys go in and do inspections, when they do, anything in a house, and they're, have them take a picture. 9 out of 10 of us carry a phone, and there should be 2 of your guys together at all times. Hopefully when they're in places, have one take a picture of the other one with a date on their phone to prove when things happen. It's just a really good, when you're doing your inspections, have them take a picture with it. It helps document things so they can't say, nah, that wasn't fixed when I moved in here. Well, when there's a picture with the guy in front of you, and the date. They can't really argue that. So if your award is based on price, where that contract award is based on price alone, not subject to negotiation, the contract should be awarded to the qualified Indian-owned vendor with the lowest quote if it's reasonable. If the procurement was not restricted to an Indian-owned vendor, the contract should be awarded to the vendor with the lowest responsive quotation. Again, if it's reasonable, while implementing the Indian preference policy. And we will be talking more about Indian preference tomorrow or the next day. If the award is to be based on factors other than price alone, use your competitive proposal method. Issue a request for proposal, an RFP, that includes evaluation criteria and the rating points that are going to be used to evaluate the merits of each quotation. If the procurement is not restricted to Indian-owned vendors, a determined percentage of the total number of available rating points may be reserved for the provision of Indian preference. Again, like I said, we're going to get into Indian preference tomorrow and the way to determine those rating points tomorrow or the next day. Documentation. Although the total dollars obligated by small purchases may be small in comparison with formal contracts, the items bought using these procedures are often as important as any of your big, large contracts. Consequently, it's important to maintain proper records of your small purchases. A copy of the signed purchase order should be attached to all relevant documentation, such as the procurement request, basis for price reasonableness, an acknowledgement of receipt of goods, and or services and payment authorization. Plus, you never know which one they're gonna pull when you're going through your audit process or you're going through your HUD monitoring. So just make every file as good as you can. It's wonderful when you can go through a final or a monitoring thing through HUD and not get anything for procurement. I just saw somebody do that and I was like, yes, that's awesome, you know. Blanket purchase agreements are similar to basically a charge account, provided they provide monthly invoicing. They established by negotiating agreement for discounted purchases with your commonly used vendors. Examples include your local hardware store, a plumbing supply house, electrical supply vendor, a gasoline supplier, office supply store. In order to avoid the appearance of sole source procurement, several of each of these types of firms should be considered as sources, and purchase agreements should be solicited on a regular basis. The following steps are taken when you're implementing a BPA procedure. Individuals authorized to purchase and the total dollar limit for each purchase should be specified in a letter to each firm. Such letters should be updated as often as your personnel changes and others conditions require. So if you've got a maintenance guy that is allowed to go down to that store and he should leave your housing entity, make sure that he's not listed on that purchase agreement so he can still go in there and purchase, you know. That's one of the things that sometimes when you're overwhelmed with work, you forget to take care of. So be careful with that one. Purchases are made either by calling that supplier to order your needed items or by visiting the supplier. For each purchase, the supplier furnishes a delivery or a sales ticket describing that item, showing the cost, the date delivered, and the name of the person making the purchase or ordering it. The tickets are accumulated until the end of the month and compared with a monthly invoice from the vendor. A check is issued for full payment on a monthly basis. If you're using a BPA for repeated purchases of the same item, totaling a significant dollar amount over time, consider awarding a formal contract for such an item. A simplified acquisition threshold, and you can find out at 288. A simplified acquisition threshold means the dollar amount by which your entity can purchase property or services when using small purchase methods. Non-federal entities adopt small purchase procedures in order to expedite the purchase of items costing less than that acquisition threshold set by the federal government again in accordance with 41 USC 1908. Right now it's at $250,000, but this threshold is periodically adjusted for inflation, just like it was. So here is a small purchase checklist. These little forms that I put in here, sprinkled throughout, these are just things that you could print off and use for your self-monitoring for your procurement department. That's one of the reasons that they're in there. Just an idea to make your life easier, hopefully. So is that estimated cost of that requirement below your threshold? If yes, a purchase order could be used. Are there available local vendors that may logistically satisfy the requirement? If the answer is no, consider additional lead time required to solicit vendors outside of your local area. May the requirements be satisfied by an existing blanket purchase agreement? If the answer is yes, use the BPA. If the answer is no, conduct your solicitation in accordance with your procedures. Did you do any bid splitting? Has that requirement been split to be below that mandatory purchase or that monetary level? Order splitting, is that unallowable practice, reducing that order below the small purchase threshold to avoid a more complex procurement method? If the answer is yes, another method must be used. Okay, any questions on that? Okay, competitive sealed bid method. Contractors submit the bid amounts, quotes, and confirm compliance with specifications. Price is a sole factor and is a fixed amount. You award to the responsive and responsible bidder with the lowest bid. Remember, responsible and responsive. If they're neither or they're missing one of those, you can reject that bid. You can apply preferences when feasible. For a competitive procurement, it's conducted by sealed bidding or competitive proposals when costs exceed the small purchase threshold. Both methods are equally effective. However, sealed bidding is preferred in some circumstances. The sealed bidding method should be used when there's a complete and adequate realistic specification or purchase description and you have it available. When you think you have two or more responsive bidders that are willing and able to compete effectively for that work. That the procurement lends itself to a firm fixed price contract and that the selection of a successful bidder can be made principally on the basis of price. Sealed bidding is the preferred method for construction procurement. Sealed bidding will be used for most construction and equipment contracts exceeding your small purchase limit. They can be used to procure materials, equipment, building contractors. Sealed bidding should not be used for professional service contracts. It can also be called bid letting or an invitation for bid, an IFP, a solicitation of quotes. Specifications and invitations are very important. It's a preferred method for conventional construction contracts, including your labor cost. It's publicly advertised unless you have a small purchase or cooperative purchase being used. This is the most formal method of procurement. Bids are publicly solicited from an adequate number of bidders who are given adequate time to respond. The solicitation of your bids. You go with a public notice. It has to be given for each procurement activity above that small purchase limitation. It's generally accomplished by advertising in a newspaper of general circulation, a local newspaper, or an industry media. Indian Country Today is what they're referring to, something like that for industry media, and such as trade newsletters. The advertisement can be posted at tribal business offices, housing offices, government offices in the area. Generally, that notice is required to be made public for at least 10 days before the solicitation is issued. So you can, give them time to put together their needed material. This is to allow prospective contractors enough time to decide whether they want to request a copy of that solicitation. Now, 10 days, you don't put the whole package out and print it. The cost of that in a newspaper would be huge. You run something for 10 days saying that this will be available. You're seeking this type of a service. This is where you go between these hours. This is who you contact, rather than the whole package itself. That public notice should state at a minimum the place, the date, the time of the bid opening or proposal due date, the solicitation number, the point of contact for the question or request for solicitations, and a brief description of the needed items. When appropriate, bidders can be required to pay a reasonable fee or a deposit for a copy of the solicitation, such as construction contracts with blueprints, something that costs you big money basically to produce, $25, $50, and you return it, it can be returnable. Preparing that solicitation, the solicitation of sealed bids is accomplished by issuing a written invitation, an IFB, an invitation for bid. All IFBs issued shall be at the standard format with the table of contents that reference whether certain sections are located within that solicitation. That IFB may incorporate documents by reference, provided that IFB explains where they may be obtained. The invitation for bid can be similar to this following outline. A cover letter. Each IFB should contain a cover letter explaining in a few sentences the basic work required. It may be useful to point out any bonding requirements at that time. Your face page. The face page should provide basic information about the IFB, including the bid opening time, point of contact, address, and the address for the submission of bids. Price sheet. Include a blank format that bidders can insert their prices into. This may include primary line items, sub-line items, and the type of contract should also be stated here. Is it a firm fixed price, normally? The invitation of bids should have your specifications and your SAL, your statement of work. Attach the specifications developed for that procurement. Mandatory clauses, contract provisions. You can find out more about that at 200-326. Include all your clauses mandated within 2 CFR 200. Also include any additional clauses or contract terms, conditions applicable to your specific procurement, such as delivery and performance schedules, special inspections and acceptance requirements, the time for performance of the required work, along with your bonding requirements, should be stated within that section. The minimum amount of time bidders are required to hold their bids open must be established and described in that section. These are not something that you would usually bring in help to write these type of documents, and unless you have a very, very experienced person for procurement on the majority of them. Your instructions to bidders and offerers. There's a form HUD 5369 for construction. There's 5369B for non-construction that is an excellent source to refer to. Because those forms explain how bids should be prepared, how they'll be handled upon receipt. The instructions should indicate whether lists of qualified Indian-owned economic enterprises or organizations are maintained by your organization. Its section should also include any requirements for bid samples and descriptive literature. The method of the award should be clearly described in the information for bidders. If optional items are going to be considered in the evaluation for award, the bidders have to be advised within that IFB. And attachments. Any attachments can be included, such as wage determinations and things like that. if you're going to, require a pre-bid meeting or anything like that. I required a pre-bid meeting before I would take bids when I did a project that was modeled after an Alaskan Craftsman. It was built for our sub temperatures, but it was almost like an airtight house. The people needed to know the requirements of that particular building type before they bidded on it. So we required them to go to that pre-bid meeting in order to even bid. Any questions on that? Okay, wage rates for construction contracts. IHB recipients must comply with Section 104 of NAHASDA, the labor standards. In general, any contract or agreement for assistance, sale, lease pursuant to that act shall contain a provision requiring that not less than the prevailing wage rate in your locality, as determined or adopted, subsequent to a determination under applicable state, tribal, or local law by the secretary, shall be paid to all architects, technical engineers, draftsmen, technicians, employed in the development, all maintenance laborers, mechanics employed in the operation of the affordable housing project involved, and shall also contain a provision that not less than the wage or the prevailing wage rate in that locality as predetermined by your Secretary of Labor, persistent to the Act of March 3rd, 1931, commonly known as the Davis-Bacon Act, shall be paid to all laborers and mechanics. And you make sure you know what those definitions are. That there is an item within the appendix documents that if you're not too familiar with Davis-Bacon, I would suggest that you print off, or even if you don't want to print it off, read it, make sure that you have that. There's not really a lot of material on Davis-Bacon, but that one was kind of helpful. It'll give you a little bit more of an idea. So shall be paid to laborers and mechanics employed in the development of the affordable housing involved, and the secretary shall require certification as to compliance with the provisions of this paragraph before making any payment under such contract or agreement. So exceptions. Paragraph 1 and the provisions relating to wages pursuant to paragraph 1 in any contract or agreement for assistance, sale, lease pursuant to that act shall not apply to any individual who receives no compensation, so if they're not paid, or is paid expenses, reasonable benefits, or a nominal fee to perform the services for which the individual volunteered and who is not otherwise employed at any time in the construction work. And then application of tribal laws. Paragraph 1 shall not apply to any contract or agreement for assistance, sale, or lease pursuant to this act if such contract or agreement is otherwise covered by one or more laws or regulations adopted by an Indian tribe that requires the payment of not less than the prevailing wages as determined by the Indian tribe. So if you've got your own tribally determined wage rate, you pay that instead of the Davis-Bacon. When required by federal program legislation, all prime construction contracts in excess of $2,000 have to include provisions for compliance with Davis-Bacon, as supplemented by the Department of Labor regulations, and are required to pay wages not less than once a week. That's how a lot of our housing entities and things, that weekly payroll. Bonding. Let me see real quick. Okay. Anybody, any more questions on that one, Davis-Bacon at all? I would definitely suggest that you read that within the appendix. So bonding requirements is an important consideration whether you, whenever you actually enter into a contract. If your contractor fails to perform satisfactorily, you need leverage to compel the contractor to address the non-performance. As a last resort, you may have to use your contractor's bond to recapture any expenses you incur due to the contractor's non-performance. As described in the regulations, there's a number of ways a contractor can meet bonding requirements, or with HUD approval, the tribe and the TDHE can adopt their own bonding requirements. Under 325 for construction or facility improvement contracts, subcontracts exceeding your simplified acquisition threshold, the federal awarding agency or pass-through entity can accept the bonding policy and requirements of the non-federal entity, provided that the federal awarding agency or pass-through has made a determination that the federal interest is adequately protected, that you've got enough to protect those funds. If such a determination has not been made, the minimum requirements must be as follows. A bid guarantee from each bidder equivalent to 5% of your bid price. The bid guarantee must consist of a firm commitment such as a bid bond, certified checks, other negotiable instruments accompanying a bid as assurance that the bidder will, upon acceptance of the bid, execute such contractual documents as may be required within their time specified. A performance bond on the part of your contractor for 100% of the contract price. A performance bond is one executed in connection with a contract to secure fulfillment of all contractors' obligations under such contract. A payment bond on the part of the contractor for 100% of the contract price. A payment bond is one executed in connection with the contract to assure payment as required by law of all persons supplying labor, material, in the execution of work provided for in the contract. 24 CFR 1026 A12 speaks to additional options that can be used as acceptable methods to provide performance and payment assurance. So you would go there to expand your knowledge on that subject. Under 1026, what's the administrative requirements under NAHASDA? Bonding requirements apply. There may be circumstances under which the bonding requirements at 200 through 25 are inconsistent with other responsibilities and obligations of the recipient. In such circumstances, acceptable methods to provide performance and payment assurance may include deposit with the receipt of cash escrow of not less than 20% of the total contract price, subject to reduction during the warranty period, commensurate with potential risk. Letter of credit for 25% of the total contract price, unconditionally payable upon demand of the recipient, subject to reduction during any warranty period commensurate with the potential risk. Or letter of credit, 10% of the total contract price unconditionally payable upon demand of the recipient, subject to reduction during any warranty period commensurate with potential risk. And compliance with the procedures for monitoring of disbursements by the contractor. After award of the contract, the successful bidder should furnish to the TDHE tribe the surety for the construction project. It is likely that the cost of this bonding will be included in the contract price paid by the TDHE. So you're going to pay for it one way or the other. Just make sure somebody legally looks at all of anything to do with your bonding and your stuff. Protect yourself. Always bring in your lawyer. Involve HUD, cover all your bases. So amending your solicitation, if a change to an invitation for bid becomes necessary after it's been issued, the change must be formalized by issuing a written amendment. Sometimes they'll refer to that as an addendum. A copy of that amendment must be mailed to each prospective bidder who was sent your basic IFB along with your required acknowledgement. If an amendment needs to be issued within 7 days before the bid opening date, the bid opening should be postponed long enough to permit those potential bidders to fully analyze the change and submit a timely, accurate bid. I should have put accurate in there. After your IFB is issued and before the bids are due, the contracting officer can hold a pre-bid conference with prospective bidders to discuss your IFB. A pre-bid conference is normally conducted only for a large or a complex procurement. Notice that conference has to be included within that IFB. The timing of that conference should allow your bidders enough time to review the IFB and revise their bid before your bid opening. At the conference, your contracting officer should state that nothing at the conference will change the terms of the IFB unless you issue a subsequent amendment, unless it's issued. A summary or a transcript of that conference should be sent to everybody on your mailing list, not just the ones that attended. Your IFB can be restricted to qualified Indian-owned vendors. However, your IFB should not be so restricted unless you have a reasonable expectation that you have the minimum number of qualified Indian-owned vendors that are going to submit those bids. And your keyword there is qualified. You make sure that they can do that job. You don't put that restriction in place unless you're sure. The procedures at 24 CFR 1052 and your applicable procurement policy should be followed. Deciding whether to restrict solicitations to qualified Indian-owned economic enterprises or Indian organizations. Your bid opening process should be similar to this outline. Each bid has to be date stamped upon receipt, secured in a locked bid box, cabinet, or safe in time until the time appointed for your bid opening. Remember the story I told you yesterday or the day before? Make sure whoever is in charge of that knows all of these rules, and they're very, very clear about stamping them, opening them, that they know all those rules. Each bid, make sure you have that date stamp. Your sealed bids has to be opened on the scheduled date and time shown on that solicitation. Okay, before we go any further, here's one of my stupid stories, okay? I don't have too many of them for 30 some years, but I think it was my first bid opening. I think I was building 15 units, and I had that bid opening at 3:30 in the afternoon. I thought, that'll give them time to get here before the end of the day. My office normally closes at 5, I never did get to open the gentleman's bid. I had to refuse it. But make sure your bid opening is not at a time when they can get behind school buses. I had them running in the door, the people that were coming in for bid. And probably one of the contractors that I looked forward to hopefully, competing really well and maybe working with, didn't make the time frame. He missed it by like 4 minutes, and you can't accept them. If your bid opening is at 3:30, somebody's got a clock sitting here just like this, and at 3:30 you stop. You don't take another bid in, you don't do anything, and you start with your procedure. Have some of your tribal council there always. I always try to do that, make sure that you have adequate coverage of that event. Maybe your tribal lawyer, but make sure your bid opening is not at a time where they can get behind school buses or anything like that. That's just my little story for the day. So those sealed bids have to be opened on the scheduled date and the time that you list on that solicitation. During a bid opening, the bid and each bidder's name and bid price will be read out loud. The bidder's name and bid price has to be recorded and made available for public inspection. So once they're open, people have right to that information, not beforehand. The record must also be placed in your procurement file. No commitment is to be made. You can say this is the apparent low bidder, but you never award a bid or make any commitment during the bid opening time. No commitment may be made to your bidder at your bid opening. Any questions, disagreements should not be considered at the bid opening. A bid received after the time specified for bid opening may not be opened. You can't even open it to see what you lost, So it must be recorded as a late bid and retained unopened in your contract file. After the contracting officer evaluates each timely bid, the responsive and responsible bidder, remember those two key words, you're always going to look for that, that submits the lowest bid and meets all your specified requirements is normally awarded that contract. So responsiveness, how do you determine that responsiveness? The first step in the contract award process is to review the low bid for responsiveness. A bid cannot be considered for award if it's not responsive to the essential requirements of your solicitation. A determination that a particular bidder is non-responsive should be documented in your contract file. Always, when you have problems with anybody, start documenting right from the get-go and keep it in a file, because you're going to need it for further somewhere down the road, you know. Determining price responsibility. Prior to awarding any contract, the contracting officer must determine in writing that the prices to be paid are reasonable. Determining the responsibility prior to awarding any contract, your contracting officer has to determine in writing the contractor is responsible to perform that contract. In determining responsibility, the contracting officer should consider the factors contained within 2 CFR Part 200. Read that document. It's, it'll put you to sleep if nothing else, if you need reading, Rejection of bids. Rejection of any bid during the evaluation process must be fully documented. All reasons for the rejection stated. Any bid can actually be rejected if the contracting officer determines in writing that it is unreasonable as to price. Unreasonableness of price includes not only the total price of the bid, but the prices for individual items as well. Discounts, if specified within your IFB, factors such as discounts, transportation cost, life cycle cost, things like that must be considered in determining which bid is the lowest. Prompt payment discounts should ordinarily not be used to determine your low bid, because there is no guarantee that such discounts will be taken. You don't see too many of those, by the way. Firm bid rules. Under the firm bid rule, one of the principles that sealed bidding is based upon, your bidder is legally bound by the bid they submit after your bids have been open. The only exception to that rule is an obvious mistake in the bid, such as a misplaced decimal, that's your firm bid rule. And it's got to be obvious. Equal bids. In the event that you should have 2 or more low bids equal in all respects, the award should be decided by drawing lots or other random means of selection. I've never seen identical bids. I don't know if anybody's ever seen one. Throw it in the chat box and let me know. It would be interesting. However, in the event of a tie bid, your contracting officer may give preference to a small or minority business and award based on low bidder status, consistent with your state, local, or tribal law. This option is permissible provided that the condition is disclosed within your solicitation. So then you would say, in the event of a tie bid, we will go with minority business, small minority business first, or, but you have to disclose it. Award and contract. Only make sure they're responsive and responsible. Reasonable price may not be your lowest bid. Use appropriate contract forms and methods after you obtain legal advice. Always bring in some type of legal advice there, guys. This is a competitive sealed bidding checklist form for your files. Is it possible to describe the requirements of the exact terms? You got design specifications so the contractor can, the fixed price. Note if a contractor has to provide a deliverable for a fixed price where unknowns are involved, contingency dollars are usually in that price. If those contingencies do not occur, the material service may be overpriced. Can it be expected that advertising will result in 2 or more responses? You know, these are just things that you can put in your files for when it's time that all of you should be doing your self-monitoring before your APR is due. Sealed bid pre-qualifications to pre-qualify contractors for Indian preference. Your data has to be maintained and periodically updated to reflect changes. You don't leave 5-year-old documents in there. Have somebody do them once a year. Make sure you check your list and your contractors at sam.gov. I think we're going to hit a little bit more on that later on. Your sealed bid for construction, a project manual, front-end documents, you know, your invitation, your bid forms, your special conditions, contract forms, general conditions, technical specs, plans, drawings. Must be publicly advertised, can also be personally solicited. Seek as many bidders as you can. You can amend or cancel by addendum, and you can limit to a set of pre-qualified bidders if you have enough. Remember, when you're opening those bids at the designated time and place, they're sealed and open publicly. A more formal process when you're doing it for construction projects. Read the bid amounts out loud. Hold all bids under advertisement. You never make that decision that day. You can extend the opening by addendum. You got to let everybody know in sufficient time though. You have to have responsive and responsible bidders. Responsive bidder, the proposer, the vendor responding to a solicitation provides all the documents and information you require. Responsible, that bidder or that proposer or vendor has the capacity and the capability to perform the work and or provide the goods properly and on time. Any questions on that? Our northern lights, they get better and better as it gets cold. Competitive
Can you hear me?
proposals. Yes.
Okay, hi, sorry. Okay, so there are quite a few questions about Davis-Bacon.
And
Sorry?
I was gonna say, did any of them read the Davis-Bacon thing?
Well, Chris is asking, how does Davis-Bacon work with the CARES Act and ARPA funds and projects?
I cannot answer that question. I can call the HUD office and ask, because CARES Act just basically, I haven't been a housing agency since then, but I cannot imagine, and I'm sure there's people here that can answer it in the chat box, but I will look it up. I don't see them giving any type of waiver on Davis-Bacon.
Okay,
But
perfect.
if you can make sure that I have that complete question for tomorrow.
Yep, I got it.
Okay. And the next one?
Yep, and then Dana is asking, does Davis-Bacon apply to painting of units? The painting would be a separate contract that is used to flip a unit, for rehabilitation and not construction. Is it safe to say any services for roofing, siding, flooring, cabinets require compliance with Davis-Bacon wage rates?
$2,000. If you're spending anything over $2,000 is pretty much, and ask her to read that thing. And if she's got that question again tomorrow, I can come back, but that's it's a $2,000 threshold.
Perfect. Yeah, James says, I believe it said if the contract's over 2,000,
Yeah.
Davis-Bacon's required unless the tribe agrees on its own wage rate.
Right. And that's, you know, some of our tribes have tribal prevailing wage rates. They trump Davis-Bacon in all cases.
Beautiful. And then one last question from Deborah about equal bids. Should this language be in the procurement policy? I believe she was referring.
It would be a good idea. It would be a good idea there, and then make sure it's got to be in those other documents.
Perfect. That's it.
Okay. Competitive proposal method. The primary alternative to using sealed bidding for contracts above the small purchase threshold is the competitive proposal method of procurement. The chief advantage of this approach is that it allows the TDHE or your tribe to hold discussions with each offerer to ensure that there is a complete understanding of the work to be undertaken. The competitive proposal technique is considerably more complex than sealed bidding and requires the ability to devote staff and resources to the evaluation of proposals. No public bid opening is held because proposals submitted by offerers are kept in confidence and not released to anyone who has not been granted access by your contracting officer. The primary difference between sealed bidding and competitive proposals is the finality of initial offers. Under competitive proposals, alterations and prices may be made after your proposals are opened. Such changes are not allowed in sealed bidding. Under the competitive proposal method, an offer may be withdrawn at any time before award, and discussions with competing offerers and changes in their proposals, including prices, are allowed. Professional services and cost reimbursement contracts will usually be handled using competitive proposals, as they will not be awarded based solely on the lowest price or cost. The procurement file should indicate the reason for choosing a competitive proposal rather than a sealed bidding procedure. Proposals include a list of evaluation factors and their relative importance, basically your point scale, used to procure goods and services when price is not the only factor. Solicitation is a request for proposals. It can usually be, these are our examples, and this is when you normally see a competitive proposal, when you're hiring your architect, your accountants, your attorneys, your developers, when you're procuring a computer system, consultant, banking services. Specifications may not be fully, prescribed. Turnkey development and construction, acquisition of pre-built housing. You're comparing Jonathan apples to Macintosh apples, so you're not bidding the same product per se as you would be when you're doing a competitive proposal. Not Jonathan apples to Jonathan apples. Who can give me the best for my money? Price is not that only factor. NAHASDA allows price not to be a factor in certain architect and engineering contracts. You can go to 320 and read about that. The solicitation of those proposals, you make sure it's advertised publicly. Commonly fewer specifications, often but not always includes a contract form. The selection criteria with point scale. So how am I gonna determine who's gonna win this thing? And incorporate your applicable preferences. So if using that point system, everything except certain preferences has a range of possible points. Use a panel of knowledgeable evaluators. So this is something that you usually use experienced, and a lot of you try to use the same ones, the same panel when you're doing your evaluations. Individual and independent evaluations are recommended. Verify and evaluate your preferences. Sample criteria. So this would be a sample. Knowledge and experience of financial and accounting standards for Indian housing programs, including but not limited to accounting for program income under NAHASDA, generally accepted government accounting processes. We can give them 25 points for that. Prior experience in Indian housing programs, up to 20 points. Evaluation of performance by existing and former clients, including evaluation from advertising. TDHE if an applicant has previously worked for the TDHE, up to 15 points. Fees charged include both the rates charged and the efficiency of the accountant or firm based on prior experience. Evaluation of Indian preference and training, employment, and contracting, 10 points. Indian preference or for Indian-owned firms, 0 to 15, a maximum of 100 points. Auditors, this is when you see this as an auditor. You don't want to hire an auditor that has never audited an Indian housing agency. They're going to try throwing public housing rules at you. at one point way back in time, they were like, we don't like you guys all using the same auditors. We'd like you to, you know, so we tried. And it almost felt like I was training the auditor. No, that's not right. Here. And I had, you know, hold on, speed dial, 1-800-735-3239. Here you go. Elton, can you please explain to them why we're different than public housing? And I mean, all the way through the audit, we went through this. Sometimes it's best to have somebody that has been in Indian country. And your auditors is one of those times. So you can build the criteria and the point system as long as it's fair and advertised, you know, to give preference to someone like that. Opening, evaluating your proposals. It's best to open them all at the same time. It's not a public opening. Access, or you assess each proposal, you determine that responsive and that responsive, you know, responsive and responsible. Evaluate often using that point scale, depending on what it's for. And chances are, guys, it could be your first time doing it. It could be another Indian Housing Authority's 30th time doing it. Google it, look it up, call them up. This is, you know, these are the times that I really, really, really liked the regional housing associations. We'd get on, you know, have a chat board or whatever, and you'd say, hey, does anybody have a good one of these? Don't recreate something. You know, you make sure what you grab is good. You have a good set of eyes. Look at, you know, your product, but sometimes it's not easier to reinvent that wheel. There has been times, call HUD. Hey, do you have anybody that's got a really good one of these? And they'll get you a sample. So always reach out and try to ask for help for things like that. Proposals received should be date and time stamped and held unopened in a secure place until the established due date. Proposals shall not be open publicly. After that closing date, all proposals received should be shown only to your personnel within the tribe or the TDHE who have been authorized as having a legitimate interest in them. You know, have your evaluation committee, like I said. Information in the proposal shall not be released to anyone who has not been authorized by your contracting officer. People with building experience, contracting experience, perhaps the people at the college that run the building trades program, you know, somebody like that, somebody with a law background, somebody, you know, make an experienced, invite them in, buy them lunch on a bi-monthly basis. You know, you're not going to need them all the time, but get a good evaluation committee from outside of your office if you don't have the staff within. I think there's, you know, stuff on your evaluation committee later on. For the purposes of conducting negotiation, proposals should initially be classified as acceptable, potentially acceptable, having a reasonable chance of being selected for award, or just flat out, nope, this isn't going to work on acceptable pile. That decision should be made after evaluation of both technical and cost price proposals, so that each proposal is examined in its entirety and the relative rankings of each offerer, excuse me, guys, are compared. It's because I got 5 minutes to go. My tongue knows it. The decision has got to be in writing, or should be in writing. Has to be in writing, basically, in my mind. Included in your procurement file. Officers whose proposals are unacceptable should be notified promptly with the appropriate rationale for such action and excluded from the remainder of the procurement. Just like when you're denying your housing occupant, you're supposed to do it in writing, guys. A written plan for evaluating technical and cost proposals should be established, and an evaluation panel members designated before you issue your RFP. Failure to take that action prior to your solicitation can give the appearance can actually give the appearance of favoritism toward one or more contractors. A specific evaluation plan must be developed for each competition. Normally, the cost or price evaluation will be handled exclusively by the contracting officer. Your technical evaluation requires a detailed evaluation plan, including a rating sheet for each offerer, listing each of the evaluation criteria and the weight you've assigned to it. The rating description should be clearly stated. For example, a rating of excellent means 20 of 20. For a particular evaluation factor, good means 15 to 20. The technical evaluator should assign both numerical ratings and narrative justifications. Excuse me. To support the ratings given. Even my throat knows it's time to go. So awarded that contract, award to a responsive and responsible proposer within the highest number of points, whose proposal is most advantageous to the recipient based on price and criteria published within your solicitation. Only to your responsive and responsible bidder. That's, keep that in the back of your mind all the time. Are they both? Is it reasonably priced? They might not be your lowest bidder. Use appropriate contract forms and methods after obtaining legal advice. Competition, contractors who are involved in drafting specs, statements of work, RFPs, IFBs must be excluded. You can't let them draft the stuff and then invite them to bid on it. No overly restrictive requirements should be allowed. No state, local, or tribal geographical preferences unless mandated or encouraged by statute. Written procedures should be required, and a pre-qualified list, if you have one, it's got to be current. And we're done for the day. See you guys tomorrow. Same place, same time. Any other questions besides the one that I have to look up for Davis-Bacon?
No, it doesn't look like it unless.
And all I'm asking on Davis-Bacon, because I plan on calling the HUD office, does Davis-Bacon threshold still apply for which two? Was it CARES and was there another one?
CARES and ARPA.
And ARPA. Okay, I'm going to contact the Chicago office today.
Awesome.
Okay, any other questions, guys? If not, we're on tomorrow, same place, same time.
Yep.
It's not letting me escape to see you. Okay.
Because I have outro slides, so everyone just really quick. Oh, I froze. Oh, gosh. Oh, can we? All right, there we go. Oh, Lord. The technical difficulties I've had again today. I'm just going to plug in the survey into the chat, and Cora is going to send out another email. Oh, thank you, Cora. And please complete it. It's one survey for the entire week. So if you have already, completed it, thank you. There's, really no need unless you have any extra thoughts on today's session. But yes, if you haven't, you have pretty much until the end of the week to do so. And we utilize that information to make these sessions even more valuable for you. So please take a second to fill that out for us. But other than that, I will not be seeing you tomorrow. Cora and Cheryl will be seeing you tomorrow and Friday. So I hope all of you enjoyed today's session and the last 3 days that I have and have not been here. And yeah, that's about it. Have a great rest of the week and have a great weekend. For those
have a great birthday.
Thank you.
She's going to be a birthday girl, guys.
Yeah, thank you.